Let it do. Hey, everybody. Welcome to the State of the Market. It is September 9th. What day is it? It is I, Andrew Avanazzi, Director of Education at OperationPit.com, welcoming you to our free educational and potentially actionable service everyday State of the Market. Yesterday we did ticker highlight show. Is Lulu still in play? I closed my Lulu at the end of the day yesterday, and wishing I would have picked gold. But what do we have this week? What are the two biggest reports this week? We have CPI, PPI tomorrow, and CPI on Thursday. So I think it sets up a pretty good dynamic for what's happening next week with the Fed. All right. A couple things. Hey, Leisha, Etsy yesterday. Pretty good win. SOUN, an option shopper. Another good win. And I closed some short puts in QS and Pro. And I'm trying to sell more of them today. So while not every trade works, on balance, still a positive day. Hard for me to get too upset about that. Now, last week, let's go to like the big thing, like the biggest thing. Is what are traders expecting? So right now, at least last week, when we had a discussion about this, they were looking for 97%. Fed funds rate goes to 4.25. The current target is 25.50. So potentially we could see 25 to 50. That was on Friday. Today, actually, we've moved to 100% ease, and now all of a sudden, there's a shot that they might even go lower. Oh, and Blue Dog is saying the payroll growth is down in revision. Another thing, also look at some of the numbers there. So what has been the demographic trend of the last 9 months? Right? The U.S. also is losing almost maybe 2 million undocumented workers. Again, this is just data. Don't go crazy on me. So the ratio I believe is for every one person that gets thrown out of the country, there's 10 that just leave before they, get tossed. That also starts to, so I think the jobs numbers might belie exactly what's going on. Also, the federal government is not hiring. They've cut off 100,000, 150,000 jobs. So just saying there are some trends that are working through the system. And I'm with Hans on this one. It's hard to not be a little bullish with this AI thing going on. Who needs a job when you can trade at home? Also, check out Hans's INC, his income strategy. He was long some calls at MBIS leaps yesterday. So again, it's just another thing where the AI opportunity options love a bull market. And don't forget that a lot of people are calling for the market to crash, right? Every day you look at Twitter. Okay, you look at Twitter, it's like, oh, we're gonna financial Twitter. Oh, it's terrible. Like, I get all that, but you have to be realistic. There's a lot money. Most money is like made on the upside, so we just have to be prepared, opportunity wise. But anyway, you should check out Han's income strategy. But the market is expecting. So here's a couple of things. The market is now, let's put it, well, put it another way. Is there anybody in here does not think the current level of the S&P 500 is based on the fact we're getting a rate cut? Is there anybody that does not think that right now? Always look on the bright side of life. I try. Right? You silly rabbits, seasonally, September is a crash month. Yes. Yep. So there's anything can always, anything can happen, but I believe right now the market is definitely feasting on lower interest rates that have not happened yet. So there's big expectation, and Christian pulled this handy chart here, but like 100% is pretty high confidence that the rate's going to get cut, and stocks are trading there. Now, are there not opportunities in individual names like, in AI, in rare earths, stuff like that? Still happening. I'd argue 100% is the highest confidence. It's hard to be more than I'm 110% confident. Didn't Trump try that? He prices are going to go down 1,500% or something like that. I don't know. It's always a little funny. Okay. It will not be a crash. It's a correction. So mostly now what I want to do here is my fancy chart. Okay. What's the fancy chart? We are getting at least 100 point to 150 point moves in SPX over a 2 to 3 day period on any interest rate news at all. So when we heard that the Fed, Powell said, oh, okay, we might cut when he was at Jackson Hole. By the way, August 22nd, nice time to be in Jackson Hole. Here, okay, again, everybody lost faith because all the tariffs got canceled. Deficit going up. Now all of a sudden, likely the court's going to be overturned because they want to give the president some power, and boom, all of a sudden we're back to the top again. And now somebody's in here saying you need to define a crash or correction for yourself before saying what it is. And I'll give you, you know what a crash is? Here's the thing. When you want to hide under your desk, the market's crashing. How many people have actually hidden under their desk when they're tired of looking at the market going down? Or you feel like you should hide under your desk? Anybody ever worked on a trading floor and the market was crashing and you're like, oh my gosh, and you're raising volatility as fast as you can? That's what I used to do for a long time. And you're like, you just keep raising vol. Traders keep buying it. Harpel, I know, was a bond trader. Susan's hidden under the couch. So anyway, I'm just saying, as a former floor trader, member of P-Coast and SIBO, I remember all, I had lived through plenty of crashes. But the crashes are where the opportunity is. Now, you just have to be ready. So here's another thing. How many people in the market's crashing do you buy stock? So in here, so in F market, I put out, usually when things are ugly, I put out, okay, I'm starting to buy stock again. What I do is I buy some every week. All my favorite stocks that I like, I just buy a little more. Buy some of this, buy some of that, buy some of this, buy some of that. So you need to look at a crash or a correction. Woodchuck's saying, don't try to catch a falling boulder. But you can close a short, can't you, Woodchuck Chuck? There's a difference between closing a short and buying new. So anyway, what we have right now is I believe we're going to move at least 100 to 150 points SPX at some point next week, up or down. We might even see it this week after the two numbers come out. So the thing is, how do you want to trade it? Lots of ways to trade it. Two-way trading style is a great way, but let's take a look. Okay. March 2024, you had a 4.2% move in 30 days. January 2024, 3.8%. December 2023, 5.1% move in 30 days. November 2023, 4.7% move. So interest rate changes are still changing the market. The fact that interest rates are coming could come down. The market is already telling you it likes to move. And not only that, it likes to move in a direction. So whatever move starts out of this, I believe will continue. Does everybody kind of understand that? We're not even having to rewrite history here. This is what the deal is going to be. Now, I think we're going to see a little blip on it after Thursday. We'll get a little sense. If we have a conflicting news with PPI, CPI, then I think we're looking the opposite direction. We could see the market selling off. And if they cut anyway, then we go back the other way. So the potential for large moves either way from this week to next is pretty big. So let's look at a couple of things that have been going on. Jobs report, lowest in years. Again, I believe part of this is what the current administration has been trying to do, reduce government employment, and also start throwing people out of the country that are not here legally. It's changing how the jobs numbers roll. So we have relatively weak jobs numbers, which is going to bolster the rate cut scenario. So that's how it's setting up. Another thing is economic uncertainty has been building for months. What's the easiest way to tell that we still have an unstable, uncertain market? What's the easiest way to tell? I'll show you. All right. VIX still can't get into zone 1, cannot get into the lowest quartile of volatility. Here, take a look. All right. We have not been able to get into the lower quartile volatility since COVID. We only got a brief amount here in 2024. We saw the 12 handle, but we have not been able to stay in the lower quarter of volatility since 2021. So the interest rate picture is still looming large everywhere. It has not gone away. The whole inflation created by COVID, the mess that the Fed did trying to undo it, too slow to unwind it, all the rest of it, right? It's still here. We can't get into the bottom quartile. Okay. So again, institutional investors are sitting on cash, right? You can almost always say that every week. What's the steadiest buyer of stocks month after month, year after year? What is the steadiest buyer of stocks, right? Pension funds, mutual funds, retail buying every month as savings. Booth says Congress. I think they're the most active and accurate swing traders. But 401ks and retirement plans, there's always buying. So what I will say now is there seems to be a consensus about, okay, rates are finally going to come down. Things are going to chill. In the last 20 years, what president had the lowest volatility recorded? Last 20 years. Which president had the lowest recorded volatility? Close, Cheryl Marchant. Trump's first term. He had the lowest, he had like the 3-year lowest average volatility of a president. Until 2020, obviously. Washington. And then before that, George W. Bush. And then before that, his dad. Right? That's just showing you Herbert Walker. It shows you how Hunt just says the BLS released 900,000 negative job reversion for 1 year ending in March. So basically, what? All of 2024, we had no job growth? So again, I think the market is painting a picture for lower rates. And I think that's what we got going on. I think that's my last slide here. Oh, look at this. Nope, one more I forgot. So, trading this. Are these things we're going to trade in my pro class? Yes. Rip zone? Yes. But in the meantime, we got to wait for something to happen. That's why right now you see SPY is only up, fractionally today. So again, expectations of what's going to happen are going to matter more. But I think we're going to have, it is not a lock. I still believe that Powell is going to cut because of government spending. Even though the probability is huge right now, bond market is rallying, I do not believe that is a lock. I would give the delta more like 25%, maybe 30%. As a message to Congress. But how can you hide in cash when rates are dropping? I think people are hiding in CDs. 4-month, what is it? A 5-year CD is 4%. A 30-day CD is 2.5% right now. And the question is from Silly Rabbit, will the bond auctions affect the market this week? I don't think they're going to affect the market as much as PPI. To be quite honest. The bond auctions will likely go as planned. What if he drops 50 basis points? I think if we get a 50 basis point drop, SPX is up 100 points. I don't know if it's a sellable open, but it gaps. It'll be an ugly upside up move, would be my guess. Crazy upside move. So a bunch of junk calls that might not, have any gas in them could have some gas in them. So also remember though what's happening from a trading point of view. We've got CPI, PPI, which could also make the market drop if they come in hot, which is possible they come in a little hot, although it looks like housing and stuff is starting to cool somewhat. The impact on VIX with a 50-point drop. I think for the first time we see VIX probably by the end of next week drop below 14 by the end of next week. All the premium and the volatility products, right? So in the meantime, though, the market's basically waiting for news and nothing's happening, right? Nothing's really happening. So what do? Tomorrow, setting up two-way trades before the Fed in weekly profit cycles. Also, all my products basically getting ready for a two-way move. Because we could also, here's the thing that I think is the biggest thing that's where the surprise comes from. Stronger CPI, stronger PPI. Mattman says 652 to 647 range is locked today. And we're not going to do much today. Because the market is looking for a cooler number. With the job market cooling, you could see cooler number tomorrow. It's possible. And then the rally starts. The PPI number is a little too hot. That could scare everybody. We're down, I don't know, 50, 75, 100 points. SPX. The number's really ugly. So we still have, and I think those two, but basically, right, if you do get a rate cut, volatility tanks and the market rallies. There's no cut, volatility spikes and the market drops. And the drop will be, I don't know, I could see 6,300 SPX in a 2 to 3 day span. It's going to be a lot of sad money. And I think we're going to end up with an odd trading market, like a real opportunity-based market if that happens. Yeah, today's a fishing and golf day if you can. But not for me. So what I would say is, if you're interested, stay on. There'll be a video playing on how to trade market swings like this. Two-way trading straddle, where we trade volatility and SPY together. Stick around, check out the video if you want. It stars me and Mark. And learn how to trade these swings. And in that video, you'll get an idea of how I manage these market moves. So as far as I'm concerned, when SPX drops, if you're trading options, it should be an opportunity. It shouldn't make you just sad. SPX dropping should be an opportunity, just not a reason for you to be sad. So if you want to learn to trade like that, stay on for the video. And it will play literally start right after this. If you want to join weekly profit cycles, there'll be a button to click as well. Also, if you want to add this to your calendar, if you go to the screen here, you go underneath Apple, Google, Office, all the stuff you can add state of the market to your calendar. Also, look for Mark and I will be doing a special on the Fed next Wednesday at 2:00. We might start at 1:45. Question is, would you rather hedge the downside with the VIX call spread or SPX put spread? That's a good question, WA. SPX is usually better. VIX is great for lotto tickets. SPX, generally a SPY if you want to make some dough. VIX is great to add as a lotto ticket. That's my tip for the day. VIX is great, lotto ticket hedging. SPX is great for making money on a down move. A daily SPX butterfly today could play today, V-Man. That's probably the best idea if you want to trade for today. And that's it. Look for Hans this week. Hans has been killing it in INC. His AI adjacent stuff is crazy, making crazy money in there for people. Remember, in a bull market, you got to be long the stocks that go up. He's been doing a great job on that. Leisha, following her small account challenge, still up, so happy. And for me, check out the video at the end if you want to learn how to put on two-way trades and take advantage of market down moves and volatility down moves. Mark is back. You should see him in his rooms today, except for Rip Zone, and I am done. Hopefully this was helpful, getting you prepared for the next 5 days of trading, because it's going to be wild. I am done. Have a good day, everybody. Happens in the market nearly every month, 96% of the time, and recognizing it created the biggest breakthrough of my 30-year trading career. It's like clockwork, 105 out of the last 110 months. Most people don't look for patterns like this, or if they do, they don't know what to do with them. But I'm a professional trader, always looking for an edge. So when I see a pattern like this, I know right away I have that edge. You see, a reliable, recurring pattern like this can be exploited. And that's why we look for patterns. Any pattern this reliable can be used to gain an edge. And this particular pattern allows me to place a two-way trade each week where I don't care about market direction or the timing of my trade. The pattern isn't about going up or down. It's not about Fed meetings or earnings. It has nothing to do with AI or crypto. It's so concrete and predictable that the pattern represents stocks in 99% of all American portfolios. It's about a move, a percentage. It's about action in the market. That's all a good trader needs to find an edge. Today, I'm going to dive deep into that move and show you exactly how it works. You see, stocks can explode higher or crash lower, and I still make money. Movement is the key, and it doesn't have to be crazy moves either. The pattern executes 96% of the time. So don't think of that the move we're talking about has to do with a crash or a bull run. It doesn't. It's so bread and butter that it goes unnoticed to the normal trader or investor. But for pros, it's all we need to get that edge. It's so powerful in my hands that I'm here today to unveil it for you. My name's Andrew Giovinazzi, and I've taught thousands of traders, the same traders you see in the background of the CNBC or on the floors of the NYSE or CBOE. I've taught them live in the pits of Chicago, the floor of the P-Coast in San Francisco, and from my perch in Maine at Option Pit for the last 10 years. I know, it's hard to believe I've been teaching students how to trade for that long. I'm so young and good looking. Now I'm the proud head trainer at our boutique firm, Option Pit. And I want to tell you exactly how we found this pattern and the success we've had trading it. It's created a revolution, and hundreds of people are already taking advantage with two-way trades. So I'm here today with Mark Sebastian, the CEO and founder of Option Pit.
Hey, Andrew, I'm really excited about what we're going to talk about today.
Yeah, me too. All right. So Mark and I are both professional traders, and we used to work together on the floor of the CBOE. That's the Chicago Board Options Exchange. Before we left to form Option Pit, a boutique trading education firm that trains everyday people like yourself how to maximize their portfolios.
And when we say everyday people, we don't mean it as a dig. We're talking about everyone who isn't a professional trader, which is 99.9% of you. Because without traditional training and over 30 years of options expertise, you never could have spotted this pattern or known how to construct a trade that pays you.
Mark and I are here today because there's always an opportunity to make money in the market. But as pro traders, when we see a pattern that happens over 96% of the time, we create a profit plan, and we have. And that's what we're here to show you. Over the last year, we've been testing and testing and testing to find the perfect trade to pay us on this predictable pattern. And we've actually doubled our results.
You know, it's funny, Andrew. A lot of people think the market is random, and they're not wrong. The vast majority is random. But as you discovered, this pattern has occurred 105 out of the last 110 months. Think about that for a second. That's a wildly reliable pattern. And as we always say, anytime we see a predictable pattern, we can trade it and we can make it pay. And you were just telling me, Andrew, trading this pattern actually gets better and better as you trade it.
And that's one of the best parts. You see, when I first noticed this pattern and launched this strategy a few years ago, I was averaging an 8% win rate every 14 days. I wanted a consistent, repeatable, hassle-free trade that would generate weekly income. And I was happy with that 8% every 2 weeks.
That beats financial advisors. That beats most hedge funds. That's a solid weekly income strategy, and one where you keep 100% of the profit. You're not paying someone a slice of the profits.
And fast forward to now, we're hitting a 20% return every 14 days on average. That's over 2 times our original returns. And that's not a hypothetical number. It's not cherry picked or from a back test. 20% every 14 days across all real issued trade alerts. This number includes both our winners and losers. Here's our full track record, and we'll dive into this more later. One of the things you'll learn about us here at Option Pit is that we are fully transparent. We do not shy away from showing you our results. And we're actually trading these ideas alongside you. Today, Mark and I are going to show you how we win with two-way trades in up markets or down, how I pinpointed this holy grail predictable pattern, and how to target 20% every 14 days on average.
Plus, and I am super excited about this part, how we set up for rare 400 to 500% wins, or even more, while everyone else in the market is getting destroyed. Hedges in the market as insurance are critical to not only every trader, but every investor as well. Why just ride the train when you can drive it. This strategy has perfected an essential hedge. We call it a portfolio saver.
That's correct, Mark. And boy, it really could do just that. In the next 12 months, between weekly two-way trades and our portfolio saver hedge, I expect we will maintain a 70% win rate. And with 150,000 I have currently in play on this strategy, I'm looking to make 60,000 or more. I created this two-way trade strategy because the pattern was too reliable not to. But I also wanted to give traders like you a chance to make more money hassle-free. With this strategy, what we make, we keep 100%.
You don't have to have six figures to make these trades either. The average cost per trade is a little over $600, and we never have more than 4 trades on at one time. So the minimum you would need to trade all positions is only around $2,400. In 1 minute, we're going to take a look at our results. We've been talking about 20% every 14 days, and we're going to show you what that actually looked like depending on your position sizing.
Yeah, and when I built this, I knew I wanted a scalable strategy that was going to help the most people. Start off and learn as a one-lot trader and see how it works, or start off with a class and a paper trade if you want. Our goal here is for you to make the first trade with pure confidence. We hear our traders say, wow, I'm starting to get the hang of this. We design our trading for everyone. Remember, I was a trader and trainer for over 20 years, and that's why we've made this as simple as possible. So, if you're trading one contract, you've risked $2,480. You made $1,791. But 5 contracts, $8,955, 10 contracts, $17,900, and 20 contracts, $35,820. Now, I know when you see results like this, the sirens are going off, a 96% recurring pattern, 70% win rate. It all sounds too good to be true. It's easy to say there's just no way. Or even if you're doing this, there's no way I could. Or maybe even, oh, well, you're just out there selling options all the time and scalping trades or some other system that's just not for me. Let me tell you, this is not an option selling program. That works great until it doesn't. Because in a single trade, it could put all your gains at risk. Only rookies would be in the option selling game long term. Part of this program and having access to the expertise of pro traders like Mark and me is learning how to manage a book of trades. I've taught thousands of paying students since 1993. Even this guy, when I was back running programs for floor traders. I built my whole career on risk management. And let me tell you, the less you lose, the easier it is to make money.
All right, Andrew, I'm going to ask the question that I think everybody is thinking. Why aren't more people doing this?
It's funny you ask that, Mark. Because believe it or not, I actually stumbled upon this pattern from trial and error. You see, when you're sitting on a floor trading millions of contracts a year, you learn the hard way. And once you have an understanding of what works, you can build trade programs that harness the market's energy and pay you. For example, the first person to discover a lump of coal probably had no idea what it was or that it was even valuable. But over time, and monetizing that commodity, they learn the true value of what they've discovered. So what may look like coal to you, to me is a diamond mine. It all started with a simple question. How much does the S&P 500 have to move for me to make money buying options? And I didn't know what the answer was, but I wanted to. And thank goodness I asked, because what I found became our predictable pattern and the source of our two-way trade. I found I only needed the S&P 500 to move 2% every month to make money trading options. I want to repeat that. And when we talked about that simple trading pattern at 96%, this is it. I was blown away by that, to be quite honest. And I would have thought it needed to be much higher. The fact that that move was that small scared me. I thought, wow, I won't be able to make a lot of money from that. And I bet it doesn't happen that often anyway. Boy, was I wrong.
Andrew, you know how much I like it when you're wrong. And boy, were you wrong. And we've been raking it in since then. Let me put that into perspective. To make money in a single month, the S&P 500 needs to move 2%. It's around 100 points. Could be up, could be down, doesn't matter. As long as it moves. That's the movement you were talking about earlier. We make money.
And out of the last 110 months, the S&P has moved at least that 2% minimum we need 105 times. That's only 5 months in the last 9 years this hasn't happened. And once we have a certainty, and really this is about as close as you can get to a market certainty, then I ask myself, okay, what's the best trade I can put on to pay me on this 2% monthly move? And I created the two-way trades.
Yeah, let's dive in on these two-way trades. Why don't you tell me about what you do and how you created them?
So first off, two-way trades are a combination of VIX and SPY. We'll call them two trading opposites. And it's very easy from this chart to see that. But really, the fastest way for you to understand a two-way trade is to go through some examples. And let me show you a few we actually traded. So let's take a look. So the first example is we enter on October 25th. We spend $521 on the SPY and $175 on the VIX. Now, also, all we need is our 2% move during that time, okay? And we're pretty sure, 96% sure, that that's going to happen. So we got our SPY move. We have our opposite move in the VIX. We close both sides of the trade, and we get a 17% profit in 5 days. Okay, so example 2. On September 27th, we spent $325 on the SPY and $420 on the VIX for a total of $745. Again, note that we have a 2% move, which we expect about 96% of the time. We get to close our SPY, then we close our VIX, which is the opposite trade, for 19% profit in 2 days. We are in, we are out, and we're done. Here's another example. We're running the trade from January 24th to February 7th. We bought SPY put verticals and VIX puts and one call vertical in SPY. The total we paid for the trade was $465, and we were out of the trade with a 16% profit in 15 days. Now, how do we do that? The first thing is the chart of the VIX where we wanted to capture money on our puts. So we entered the trade right here around the 24th. We had a run up in price, and then VIX collapsed into the end of the trade where we closed the puts. So that's, again, closing one part of the trade, leaving the other part of the trade open. The second part, running when we owned SPY calls. So we had an upside where we got to sell the calls relatively early in the trade. And then on the downside, we had a quick, sharp move in SPY, and we were able to get out of our SPY put spreads. So the way the trade worked was we were able to hold the VIX puts for a longer period of time, and we closed the SPY in a very short period of time.
Andrew, this is about as reliable as a geyser in Yellowstone. Another key piece to that reliability, though, is how you close the trades. Can you walk us through your closing rules?
Yeah. So here are some of our rules for closing these trades. When we put the trades on, we put both sides at once, and we do that immediately. So one side is winning. I'm not trying to pick a bottom, and I'm not trying to pick a top. And I don't care about the specific moment that I put the trade on. I always put them on at the same time. That's key. Number 2, I don't even look at the trades until one side is up at least 50% from where I put it on. Number 3, I ride that 50% till I hit an 80% gain. That's my target. And when I set that, I look to take it off. Number 4, anytime I have a momentum change. So once that one side is off and I have a change in momentum, that's when we really clean up and make some money.
So you're making enough money to pay for the one side of the trade with the other. And if momentum shifts and the other side wins as well, that's what takes these two-way trades from consistent 20% every 14 days and makes them home runs, correct?
That's correct, Mark. And let's look at another example. So, again, knowing what we know now, on August 30th, I spent $285 on the SPY, and I spent $360 on the VIX for a total of $645. Again, we had a much bigger move in SPY this time. We get our 2%, which we expect around 96% of the time in a month. I take profits on my SPY. I take profits on my VIX, which is the opposite trade. We closed for $7.95 or a 23% profit in 7 days. Okay, now here's another example. So remember, we're putting trades on. We don't necessarily have to be right on direction. We just need to let the market move one way or the other. So this was a one-day trade. It happened very, very fast from February 12th to February 13th. Now what happened here was we got a very, very, very sharp spike in VIX where we were able to take off that position very, very fast. On the SPY portion of the trade, because we had the very quick drop from the 12th, we got to sell our puts very fast. And then by the end of the next day, we were able to sell our SPY calls out. So we had a very quick turnaround in SPY in 1 day because the market literally had a 2% move in 1 day instead of 30 days. And then we just exited our VIX put at our leisure. Now here's one more example from February 12th to February 15th. So we enter the trade on February 12th. Again, we're moving up very sharply in VIX. Doesn't matter, even though we own a VIX put, it doesn't matter to us. We don't have to close our VIX put. What it did give us the opportunity though to do is because the move was so sharp up and down, we were able to run our SPY calls for 3 days. We had a sharp 2.5% move up, and I was able to sell my SPY calls easily and then go back and hold my VIX puts for a nice close after VIX collapsed from this very sharp peak. So once again, we don't have to be worried about direction. We're just really looking for the trade to close that's paying as fast as possible. Now here's one more example on about a 5-day hold. So from March 6th to March 11th, I have a VIX call and a SPY call spread. Now you can see we have basically a straight up march for VIX. And I ended up selling the call somewhat near the peak. On the flip side, I was able to exit my SPY call spread early because VIX and SPY were actually running together in this particular case. SPY going up 3 days of straight run up. I was able to sell my SPY call out and I was able to sell my VIX call out and make a 30% profit in 5 days. In this case, I made better returns because I was able to close both my SPY call spread profitably and my VIX call profitably. And those are my examples of how to trade weekly profit cycles. Now, I'm going to do something here that people don't normally do. I'm going to talk about a trade that didn't work. Now, in the last year, out of 30 trades, we've had 26 winners and 4 losers, and our biggest loss was 35%. Now, on this trade, we made a critical mistake. We didn't close a win, and when the market reversed, our gain quickly evaporated. And what I learned from this was that we need to take our profits sooner. I got a little greedy on this one, but as I was saying earlier, this strategy is always evolving, and I'm always learning. I'm always making adjustments. I'm always optimizing two-way trades, making them stronger and easier. Adjustments like this are what catapulted our results from 8% every 2 weeks to 20.
We've mentioned this a few times, but I know we're going to get questions about the portfolio saver, the massive hedge that's literally built into the strategy. Talk to us about how that portfolio saver works.
Okay, as we know, people are always waiting for the other shoe to drop. And as a matter of fact, according to most market research, there's a bear market fear in all of us, myself included.
Yeah, me too.
So when the market becomes hot, I'm always waiting for the downside. So I built in downside insurance with the portfolio saver. Here's how it works. As long as you have a two-way trade on, if the market falls through the floor, you're going to get a serious windfall. This won't impact our two-way trade targets, but like all smart men, I want insurance, and this is it.
Let me step in real quick and talk about one of the most exciting aspects of two-way trades that I use myself, the portfolio saver. You automatically get this insurance. It's literally built into the two-way trade, meaning that if the market has a huge move to the upside or the downside, that's great for two-way trades. We're going to see way more than our 20% target. Right now, you have what, $150,000 in the strategy? Say the market was limit down. That means the market drops 5%, when the market drops 5%, they actually stop trading for a half an hour. So if that happened, they pause trading. Everybody's terrified. How would the two-way trade perform?
So instead of 20%, I could make 3 to 4 times my money on the trades I have open. So I'm doing the happy dance, I guess.
Yes, and everybody wants to see you do your happy dance. Let's face it. So to sum it up, there's a market pattern that happens nearly every month, 96% of the time. We've shown you how to harness the VIX and SPY to build two-way trades. We showed you our track record, and we showed you the invaluable insurance of the portfolio saver, which in a single trade can return 3 to 4 times your money. How can everyone here learn to do this?
I've developed two-way trades into a trading program that you can join today. It's called Weekly Profit Cycles. Weekly Profit Cycles is where we take advantage of the 2% monthly move. It's where I'm alerting these SPY and VIX trades, and it's where you can actually put on the positions with me. Let's walk through everything you get when you join Weekly Profit Cycles today. First, you get the Trade Strategy Dossier, which explains all of the trade varieties that we have and the conditions that make Weekly Profit Cycles work. And counting down to the next live session on Wednesday, every Wednesday at the same time, we have a trade. If for any reason we are not going to put a trade on Wednesday, we will put out a riff trade that's off cycle for that week. Now, next you get 2 live trading sessions per week. You get a session on trading and a session on education that are about 45 minutes long each. There are people using this strategy and live trading with me on Wednesdays who had never used two-way trades before this, who are now entering these trades each week on their own. These two-way trade masters will also be at the Wednesday sessions.
Yeah, and I want to talk about that. You literally did take a bunch of people and show them how to use two-way trades. I want to talk about my friend Cleet. Cleet's a member of Weekly Profit Cycles. He dropped every other trading strategy that he was running and is now primarily using Weekly Profit Cycles. In the last year, he told me he's made almost $60,000 trading the Weekly Profit Cycles strategy, two-way trades.
It's pretty fantastic.
It is.
When you join, you get two-way income trade alerts, either email, notification from our app, or on the website, all in real time. Next, you get our 1-hour Getting Started class, so you can hit the ground running, getting ready to trade your first Weekly Profit Cycles trade, your very first session. And lastly, you're going to learn to create your own small hedge fund using the Weekly Profit Cycle system. And this is what I'm most excited about, giving people the opportunity to learn how to trade the market in any condition. We truly built this to be as simple and hands-off as humanly possible.
So, when's the next trade?
Wednesday. This coming Wednesday, we'll have our next Weekly Profit Cycle trade. And as we said, we'll put it on together in class. The goal, as always, is 20% in 14 days, or even better, of course. I want you to join me before our next alert. And today I'm offering you a special price for new members of Weekly Profit Cycles. In fact, I want to make it as easy as possible for you to join me. OptionPit stands behind all of its products, and it's our policy to offer a 14-day money-back guarantee. If you aren't satisfied with the service, we will refund your money, no questions asked. That way you can attend 2 live sessions and put on 2 trades and really see the value of this strategy for you for 14 days. Click the offer on your screen right now and make sure you get in. And when you join, I'm immediately going to send the Trade Strategy Dossier and a few other bonuses you'll see on that order page. So make sure you click right now and check them out. We'll get you ready to trade and up to speed before our first live session. And make sure you're fully equipped and confident to place your first trade with us. I can't wait to have you as a new member of Weekly Profit Cycles. And Mark, thanks for joining me here today.
You bet, Andrew. It's been a pleasure as always. I am so excited to see what's next for Weekly Profit Cycles and to welcome all of today's new members.
Make sure you click that link. And thanks for joining us. I'm Andrew Giovinazzi, and I'll see all of you in your first live session on Wednesday.